The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we've got a market that's seeing the fun buying out here. We're at 2044, up 23 points on the S&P cash, and 2.9 billion shares is got a little bit of short squeezing going on out here, especially in things like crude, up $3.69 in crude. Gold not getting the love out here, down $11.40. Silver off 16, 17 cents. And platinum up 10, though. Very interesting. And that's pretty much it at the moment. Don't have anything of significance out here. We're in a wide trading range. And I can imagine that traders, whether they're bullish or bearish or manic depressive, depending on which side that they're on. This market's been bouncing around for a while now. And every time you think it's going to break down, it rallies. Every time you think it is going to rally and break out, it tanks. And so it's got a little bit of something for everybody. But I suspect that this is probably about as good as it gets, with fund buying pretty much over today. So that would be it. Let's see. What else do we have going on here? Oh, Andy Heck says, start digressing. Anyway, we were talking just before the show here, typing at each other. Not really talking, typing at each other. And he's got a new article out on Seeking Alpha, one of several out here. And he was talking to Tom about something. I said, I typed to Adam. I said, that kind of reminds me of whack-a-mole. And he started writing an article about whack-a-mole and commodities in the dollar. And that's new out there. I'm sure he'll post it in the den shortly. Of course, he comes on at 5 o'clock and also has a big webinar coming on. What is it, the 25th of February for commodities? So check that out, too, as I digress. And, of course, going to be more interesting to me, not what's happening today, but what happens at the close and what happens tomorrow with the door of fund buying. I kind of said it last week, which is that there's always this money comes in. And the question is, just how much can they market this thing up before they actually basically let this cash come in? No one can pay rock bottom prices. And as soon as everybody started to buy on Friday, we started seeing, of course, the chieftains of the street making sure that they could mark this market up as high as possible to get that IRA money that flows in at the end of every month.
Well, let's put some lipstick on this pig.
And that's what they did. They greased up the pig. They put some lipstick on it and a nice little bow, and it won a blue ribbon at the prize. But now what is really going to happen, and that is going to be over the next couple of days of what happens. And that could be it. But it is a bacon, making bacon. But it is, if for people that haven't been around trading for a long time, that lipstick on a pig thing was, I think it was a Charles Schwab ad. And it had to be around 2002 or 2003 when a great deal of voicemails and emails and text started coming out about what was going on Wall Street. And I think it was right after I think it was, maybe it was a voicemail that came out, but it was a voicemail to all the traders out there. And that's exactly what they said. Let's put some lipstick on this pig and get it out the door. Because, of course, the business of Wall Street is to push out paper, not make you rich. If that happens, so be it. But Wall Street kind of looks at it like the Chinese, and that is all money's theirs, and you might have it for a little while, but we'll get it if you sit here in our casino long enough. And in fact, I'm going to bring, I don't have that still, but I'll bring it up. When someone asked me about Alibaba, was listening to a big interview today on Bloomberg radio, and just happened to catch it when I was driving around at lunch today. But very interesting, and I'll try to find the guys. I think maybe I did put it in, options, the Windows red notice. Let's see if I actually did. I thought I linked it. I did. I'll show it here probably during the next break when I get the time. But a very interesting saga. It's actually a book now of an investor that got in on the ground floor after Russia tanked, how he made millions over there, and at the end almost was thrown in jail, his lawyer killed. And my thoughts are just how far that can go, maybe into China. But I'll pop that up when I get a chance out here, because, of course, I've digressed. And, of course, I win every year the Digressing Award at TFNN. They present me with the trophy, and it's a fine trophy. It looks kind of like the Stanley Cup. It's big and large, and I get to hoist it over my head for winning, once again, the Digressing Award on these shows. But in the meantime, we always like to start this market off with a little bit of histoire.
Then it's all just a little bit of history repeating.
On this day in, actually, this is wrong. I forgot to change it. It should be, let's do it right here on the fly. 1964, not 1864. Direct feed to the stock ticker at the New York Stock Exchange extended overseas for the first time as Switzerland gets real-time link to the following share prices in New York. And kind of hard to think that now in a global market where someone sneezes in Japan and the dollar moves 50 cents over here, and then the euro moves down a quarter because of the same thing, and you get this kind of pin action like the bowling alley of one pin flies and a bunch of other ones get knocked down. You always think that maybe that was like that way, and it's certainly not. 1964. We talked about just a couple of years ago how they spent $350 million to gain 10 milliseconds between the Chicago Board of Exchange and the New York Exchange, NYMEX, just to be 10 milliseconds ahead, or a thousandth of a second ahead of everybody else, made all the difference in the world. That's kind of slowing down. Markets always react and get back to it. But just looking at this today reminds me of what I think is the first Bible of trading in the stock market, and that is Reminiscence of a Stock Operator, one of the best books ever out. But most of the early part of the book is about him figuring out that it was almost impossible to trade at scale, being far away from the stock market, and that it was almost always he was getting clubbed by slow ticks and slow data coming back from the floor, and slowly that he had to figure that out. Now, almost all of us are getting data today that's half a tick and maybe half a second or a second behind what's happening on the floor. Of course, they're still high-frequency traders. But on this day in 1964, the world became a smaller place. And interestingly enough, just the same. Other things going on out here is SSYS. For all those that have been around TFNN for a while, they know that I got in on the ground floor of a 3D printing. Once it hit its highs, I had a pretty bold statement saying that it had hit its highs. We basically shorted almost all the 3D printers. And finally, right after SSYS, actually, I think I've got a chart of that ready to go, we shorted in the Tech Insider this high back at 130.83, which was on September 18th, and made a boatload back when options were they were ridiculously small. I can't even remember how much we made, but it was a boatload. And had a good move off of that. But I was pretty sure that we'd had it. We basically shorted all the rest of them DDD. And, of course, we were long originally in it and made some good money. Then it became kind of a football and a trader's paradise, almost a Rorschach test for people that believed that these things would do nothing but go to the moon. If anybody had been reading my Tech Insider lately, they would have known to be fairly worried. And I see John Nazarian at CNBC took the full brunt of the 25% loss overnight in this stock. But there is a reason. I think someone called 7 or 10 days ago, and I said, there's something big, and I've written about it in the newsletter. And if you're a subscriber to that newsletter, you would know the reason why that these stocks are starting to tank. I think we got Stratasys twice. But actually, I was looking at this thing at around, I think it was about $84. Made a fairly good signal that it made a low and then proceeded to go $4 lower. I got out with my 6% loss on this thing and knew that because this stock was not acting correctly, that there was probably something else going on that I was unaware of. And I think, we got out. About 4 or 6 weeks later, I figured out what the problem was with all these 3D companies, but probably nothing more than Stratasys, which was the belle of the ball of funds out there. They liked this stock. They hated DDD because, of course, it had become such a football for the fast money crowd. I think we shorted that 3 times and had big winnings twice. VJet and VoxelJet and some of the other ones out there, X1. I think we shorted them all at one time and made some pretty big money in the Tech Insider. Now, what is going on in 3D printing that has the evaluations for this coming down? One, they were pretty much astronomical to begin with. But secondarily, one of the things is that the model was based on consumables. And I thought this was probably going to hold for a long time. But actually, this has been a theme since pretty much hitting the highs. And I'm trying to remember what it was. It was in, I sent it out that the market had pretty much hit highs. I can tell you the date because this thing was $96. And I think that's when we first started shorting 3D systems, January 3rd. So it's been over a year. And we were short this many times last year. Of course, SSYS was, we were told that it was different than the rest, that they were the one stock that could continue higher. But that consumable markets is where the pain is coming in. We'll be back in a minute to finish this up.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're sitting here watching these markets up 21 points now at 2042 S&P cash. And you could probably make a case that if we close here, we're right on the line. Probably close below 2038 on the S&P cash would be once again fairly bearish. We're kind of 50-50 at this level for a close, but we'd know more. 3 billion shares on the New York Consolidated Tape, so we have a huge amount of volume. But looking at it, especially looking at the transfer of where cash is going, it looks to me like they're getting out of some of the more high flyers and moving to things not gold but crude today. And I don't know if you listened to my show yesterday, I thought the winds of war were starting to sweep across the Mideast, and even saw the huge amounts of inflation in Russia's food costs, and that they're talking about capping those. And we all know how well price caps work, especially in something like Russia. All that means is they're going to starve a handful of people out. But anyway, we'll get back to Stratasys. The whole thing basically depends on a model where, like the printer model, which is what everybody thought this was going to be when it began. The problem basically has become that it's very hard to hold the printer model to this because it's far easier to get different plastics or different suppliers for plastics. Most of the plastics that have been used in 3D printers come on a giant reel, like a fishing reel, except it's a little thinner than the lead of a wooden pencil. And it goes through and gets heated and then gets put like a hot glue gun down as it makes items. But that's all good and well. But what you find out, and one of the good reasons that that business is so big, is that is about 100 times more expensive than the plastic that comes as pellets. And I forget what it was, 6-8 weeks ago, could be 4 weeks ago. I'm starting to lose track of time. I basically came out with an article or a section in the Tech Insider that basically said, hey, the big reason why that these companies are starting to continue to come down there are new companies coming out with printers that use these plastic pellets, like everything else in Plasticville. There's a reason why everything made out of plastic is incredibly cheap to make. That is because plastic is incredibly cheap to make. It's gotten even cheaper with the price of oil down where it's at. And when you think that you can probably get plastic and pellets for 1/100th of the cost, or at least 1/10th of the cost of the plastic on spools, that is really hit this model of 3D printers. Now, of course, that's not all 3D printers print. They print at a variety of sources, but probably 90% of the money spent right now is on plastics for 3D printers, and the rest probably made up with some form of plastics or various versions of plastics. But there's no reason why all those can't come in a big hopper and a bead. And when you buy them at the at your manufacturing facility, if you were stamping off, I don't know, maybe it was plastic dog turds or something like that. You buy these things in big 55-gallon drums and they just ship them to you. Or if you're really huge, you get a train car load of them, and they're offloaded just like grain or anything else. But anywhere from 1/10th to 100th of the cost means that these companies are not going to be getting back the money from those plastic consumables, and that's what's really hit hard. So just keep an eye out on that. The other thing was, somebody asked me about investing in Baidu before it got hit. It was down $10, I think, the day after earnings. And I said, you just never know what they're going to say. But one of the things that hit me like a ton of bricks was listening to this gentleman who has a brand new book out. And he basically talks about how he got started in the 90s and made, I think he had $4.5 billion invested in Russia at one time, started getting out, and they tried to steal all his assets, but he'd already made it out the back door. But later on, they tried to make a big scam and pin the tail on the donkey for him as creating it. He hired an attorney, and they beat his attorney to death. Anyway, we'll talk more about this when we come back. I think China is just the same.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
That's right. You can give me a call at 877-927-6648. And what else is going on out here? We got a market kind of rocking and rolling. We'll see how this is at. We're at 2040. We got lots of volume today, 3.14 billion shares. And I'm looking at basically anything below 2038 is probably a still pretty good signal of bearish territory. Anything over 2045, probably a good signal of possible higher prices. But I would probably still have to wait for a little bit more confirmation. And kind of in the mid right here, a couple points higher than I'd like to see this thing close. So we'll see how it happens at the end of the day. But fun buying should pretty much be over, and a lot of the short squeezes should be there. Probably going to get a little bit of pullback tomorrow, and that pullback will tell us whether we're headed right back down to the previous lows, or whether or not the bulls were able to get enough tinder to start a fire. Anyway, we were talking about investing in Alibaba and Baidu, and I still can't get past the fact that these are communist countries, and there isn't a whole lot of rule of law, although a lot of people, I think, tend to pretend there is in China. Maybe it's just a much better mask. There was a lot more chaos, of course, in Russia. And it was probably a lot easier to figure out that, as Bill Browder said today, that basically everything was at a 99% discount. He sold it when it was at a 90% discount because everything was so horrible there, and got cashed out. But there was a reason for that 90% discount. I think that there's probably a belief that you will always get your money out of China. I do not believe that. I don't think, other than it looks a lot cleaner, China probably not any better, and you will probably have a problem getting your cash out. Hopefully you don't get charged in absentia and have your lawyer beaten to death with clubs by Putin, as this gentleman did. But you'll check it out. He's got a new book. Maybe I'll find it on Amazon during the break and show it after the next thing. But these guys are all the same, whether it's communists in Russia or communists in China. Their goal is to take all your cash. And my guess is that all of the problems with them chasing these people down with corruption was that they just didn't kick enough back upstairs. So I'm not thinking that this corruption thing is anything more than they were taking too much. Just want to wet my beak. Just need to wet my beak. Anyway, we'll keep an eye on this. Other stocks out here that I'm keeping a close eye on today are some that are back at support. These things should have significantly bounced with volume today as they got back into these lower lows with lighter volume. And you're seeing some bounce out here. TripAdvisor is one of these. Nice little bounce, but we're not getting the volume, which is kind of interesting to me, especially as one of these China stocks that may be giving us a heads up. Of course, this thing bounced before up to, what was it, $71.53. We're up to $70 today, so we've got a little bit more to go. Could we get a little more bounce out of here? I would have liked to seen some volume, which we didn't get. Now, it has tested its low with lighter volume, but that doesn't mean some kind of giant V bottom. You could consolidate out here for a while because it has come off some significantly huge highs. This thing's almost been halved. And, of course, you've got three nice big gaps here, but you really don't have a third gap away. But a nice big gap out here. I'm thinking you might get one more big gap out in TripAdvisors before that is out. Starwood, Waypoint Residential Trust, some of these REITs out here are hitting some lows on lighter volume and getting the little bounce they should. Again, you'd probably like to see a little bit more volume out of some of these. And if the bearish case holds, you're probably not going to get it. If the bullish case prevails, these things should have been rocketing out of their lows today. This one basically has tested its October 14th low, $23.92, 730,000 shares with 270,000 shares yesterday. So absolutely super light volume out here. Decent bounce out of here, but nothing that really says we've got some kind of sign of strength coming off these bottoms. Of course, the sign of strength is a big candle with big volume. And why a lot of stocks are kind of somewhere in the middle with a lot of short interest. I'm not seeing a lot of stocks break out with higher volume out here today, although some of these hitting lighter volumes and testing lows are back in the trading range. Scripps Network, SNI, is one of those. The February 3rd low, $71.33, basically a million shares. Tried to get into it with higher volume on the 16th of November and bounced off of it. It's back down and finally out here with some lighter volume in the last few days as it went below that major low with 1.3 million shares, 720,000 shares yesterday, but just 592,000 so far today. So again, some of these things that should be getting some love and a lot of volume on a huge volume day like we have today, not really picking it up. But a lot of these ones that are probably churning a lot more. Now, Quintiles is a very interesting company. I know a lot of people don't know about it. But very interesting to me. And in the meantime, you can always email me at path@tfnn.com or post a message in the den or call us at 877-927-6648. Quintiles is a company that basically tests live humans for drugs. And this company has gone out of business at least once, maybe twice, and come back as a public company. But basically, if you see these ads where if you need money real bad, they'll give you $3,000 to come over and live in their facility and give you their drugs, although it may cause a variety of symptoms. Some of them really bad, some of them just disgusting. But basically, that's what they do. You are a human lab rat. And they've had some pretty big lawsuits and why they've gone in and out of business. But Quintiles pretty much has broken out, come back into this trading range, which I think is going to be very interesting, especially as we start to enter some of these biotechs coming out with earnings starting tonight. On this one, the November 3rd high, $60.71, 1.7 million shares got tested with a third of that on January 28th, with just 470,000 shares. It is back into the trading range. It's got a gap down around $57. Nothing that tells me to pull the trigger right now, but I'd be watching this one if the biotech sector fails and what that might mean going forward. But interesting nonetheless. Progressive. Procter & Gamble. This is one that came back, and it should be having a huge volume day out here. It has come back, gapped up on the 24th of November with 13.5 million shares. Got back into it with 10 million shares yesterday and 14 million shares, though, the day before. So basically, you got into it with at least that gap with higher volume. Lighter volume, lower price yesterday. You get your bounce out here today, but it gives back a great deal of that. And again, not a lot of volume for a lot of volume in this marketplace. The Mosaic Company, I know Andy's going to be out here at 5 o'clock with his commodities hours, and maybe he has some enlightenment. But of course, after getting hammered when the Russians tried to decimate this market, like the Chinese have on so many of their markets, of course, Mosaic Company sells fertilizer. Very interesting to see this one breaking above its November 19th high, $48.73, 8.7 million shares with 2.6 million shares. So this looks to me like we're kind of in a goal line defense of this market. Now, could you still get back up to 51.25 where the very, very long-term resistance is? I think the answer is yes. And maybe in a day, $1 more is all this thing needs to get back up to the June 23rd high of last year at 51.25. The question is just whether or not we get, let's go to a little longer time frame. This thing got blown apart, and this is the gap that we're up against. That gap happened back on, what is that, to the June 29th of 2013. And that is when basically the Russians dropped the price like a hammer on that, and it gapped down. We've been trying to fill that gap, but even last time you had 8.2 million shares, which still wasn't enough, January 15th of 2014. So we've got a year going on and 2.6 million shares. Looks like there's a lot of resistance right in this gap down area, and it doesn't look like it's getting stronger out here. Kind of a nice big trading range from about $50 to about $40. So maybe Andy will talk about that tonight, about fertilizer and some of these other companies reporting. Some of these other ones that look rather interesting. Big W formation on live person LPSN. Again, this thing took off with a huge volume on the 31st of June of 2014 with 4 million shares. Or is that July? July 31st of 2014. And it is 4 million shares. So we've come back into it. Unfortunately, this thing gapped down with 1.8 million shares. It would be a lot cleaner. and that was on the 15th of January. Now we've kind of been going sideways out here. And again, you're going up against some tremendous gap up volume of 4 million shares. Not a lot of volume out here. What do we got today? 185,000. So you're at support. But again, no V bottom out here with a lot of volume coming in and this thing rocketing higher. But we'll continue to keep an eye on some of these. GLF, Gulfmark Offshore. Of course, a lot of these oil companies have made lows. We've been talking about that over the last week. But again, are you really getting a huge volume move off these lows? And this one may be just a little bit better. But the energy up from the December 16th low to the December 26th high at 24.95 had about the same energy back down, which is more an issue of consolidation than a giant V bottom in these. But it certainly tested volume with half the previous low of December 16th that had 1.2 million shares at 1949. Went below it. We've closed back above it. And, of course, 588,000 shares so far today. But this one's a little bit better. This is not as bad as some I'm seeing out here. But a lot of these things that are on the bottom, if you're bottom fishing out here, should look a little bit better. Again, some of these things should be bouncing rather strongly. BioScript, BIOS, BIOS, like a computer BIOS. Kind of interesting to me out here. Nice trading range for a $5 stock. November 14th, this thing came down with monstrous volume. That on November 16th, $5.44, 4.6 million shares. Came into it with a fourth of the volume yesterday. It did not hit that low, though. You needed 3 cents lower. This thing's kind of coming back. And again, maybe the market does head higher, but for me, kind of interesting to see that some of these stocks aren't instantly seeing, of course, their big pop. What else do we have out here? ACCO. That is ACCO Brands Corporation. Another one that had a big volume gap up. Would think that a lot of these things would be rolling out here. This one's probably going to come back to 750, maybe get us a better idea. November 29th, this thing gapped up in 2014, 6.3 million shares. Nice big gap, real sign of strength. It's coming back into this gap. Yesterday we had a little less than 800,000 shares today. Tried to go higher on 750,000 shares so far today. You'd want it to fill probably at least half that gap at 750. You'd want to see the volume really die out here. But, I mean, these are some standard or some of the best buy patterns out here. And you think maybe they get a little bit more love and are not. Anyway, we're going to break. You still have time to give me a call at 877-927-6648. You have the opportunity to email me at path@tfnn.com and or post a message in the den if you can get one past Andy Heck. And that would be it. Anyway, give me a call. We've got plenty of time left to handle it. I know a few people called with about 1 minute to go yesterday. Don't be that guy. Call now. Operators are standing by.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And got a question here in email from Frank. Doesn't tell me where he's from. Frank from Hotmail. And it is, if the general market tanks, do you think gold and gold equities will go down with the market or up? In the past, they have held up much better than the general market. But if an entire market sells, strangely enough, a lot of people will sell the stocks that have done the best and or losers. It's very hard in a down market to get anything to go up. My guess is if the market really tanks, gold will outperform the gold equities themselves. You'd have to have a real huge move, I think, to outperform gold itself in a down market. In a market that's chopping like this, normally fairly good for gold. And maybe one of the reasons why we've seen the gold miners come off the bottom is that gold likes a sideways market for the most part. And that goes back to a interview that Tom O'Brien did probably in 2001 with Jim Sinclair, who said that he always made his money, the most money in gold when the equity markets were going sideways. And maybe that tells you a lot. So you'd have to see whether or not the market actually tanks out here or just continues to chop up and down. But interestingly, that's it. But thanks, Frank, for the email. And, of course, always you can email me at path@tfnn.com with your at least name and where you're emailing from, so I can remember you. If I get 15 Franks, it's hard to know which Frank I'm talking to. And if at least I have a city I know Frank from somewhere, or the disembodied Frank who just sent me this email. Anyway, GNC Holdings was down fairly hard. The New York Attorney General sent them a kind of nasty letter about it, coming back in. It's blown out. It hasn't yet, but it's gotten close. It certainly got into the December 11th low at $41.17. GNC Holdings, of course, the mall retailer that sells herbal supplies, but unhappy with some of the statements, I guess, that both Walmart, Target, and Walgreens is for selling these store brand herbal supplement products and doesn't like it. Did not hit that low, but my guess is you're probably going to see with the kind of volume you have out there today that it will test the $41.17 low. SCCO is another one out here moving. And what do you get on this one? It's right up here to its highs. It certainly has volume yesterday, 2.3, 2.5, and it's going up against a higher volume. But this is going through that December 29th high at 2861, 1.1 million shares. And the question is whether or not it can hold those highs or if this is not just a short covering revolution. You have this high volume low of SCCO at January 14th. My belief is you're probably going to see that low retested before you have a permanent low in. Nice volume out here, but it may just be because it's toying with this area where a lot of people went short and seeing some short covering. But that is it. SCCO whack-a-mole, Andy Heck says. So maybe, maybe not. In the meantime, sell when you can, not when you have to. Same goes for cover when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time. Hope everybody had a good time. And tell a friend about the Power of Trading Hour. And your next trade is going to be a winner.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.